Nike stock just released their latest quarter's earnings, and the result is the company saw the largest sell-off in a single day in the company's history. If we look at them in the past year, down 31%, but in the past month alone, this company is now down 20%, trading at $75.43. Now, this is a company that, historically speaking, has had an extremely strong brand. In fact, if we look at this poll that was done in November of 2023, we can see 63% of the people polled said that they really like Nike, which was larger than all their competitors. So what has happened to Nike? What's the reason for this huge sell-off? If we look at them in the past 5 years, we can see they were once trading as high as $175 per share, and they're now down over 60% from their all-time highs. So what has happened to Nike stock? So in this video, we're going to be looking at that recent earnings report. We'll be jumping into the company's financials, and like always, we'll be seeing if the company is trading at a good value by calculating its intrinsic value. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So let's go ahead and dive into this earnings report. If we jump over to Seeking Alpha, we can see Q4 non-GAAP earnings per share was actually a beat by around 17 cents, so they saw a decent beat on earnings. But if you look at revenue, it was actually down by about 1.7% year over year, which was a miss by about $250 million. So let's jump into this just a little bit more and look at some of the key takeaways that Nike put on their investors' website. If we go ahead and zoom in, we can see full-year revenues came in at $51.4 billion compared to $51.2 billion in the prior year. So it was up slightly, but not by very much. And we can actually see fourth quarter revenues were $12.6 billion, which was down 2%. Now, if we jump over to my income statement / profitability spreadsheet, come up here, plug in NKE, and hit enter. We can see all this data will automatically load in thanks to ticker data. And if we come over here, we can see our revenue versus cost of revenue chart. And what we can tell is, historically speaking, over the past decade, Nike has not had any trouble increasing their revenues year over year other than 2020. And what we can see, if we come over here, they have a 10-year revenue CAGR of about 7.3% and a 5-year revenue CAGR of about 7%. So pretty good revenue CAGR during this time period. But again, like we just saw, revenues down 2% for the fourth quarter. So revenue has slowed down significantly over the past few quarters. Now, if we scroll down a little bit even more, we can see gross margin for the fourth quarter increased 110 basis points to 44.7%. If we jump back over to the profitability spreadsheet, again, 44.7%. We can see that is right in line with the 10-year average gross profit ratio for this company of 44.67%, and it's actually a little bit higher than it was in 2023 when it was sitting at 43.52%. So it looks like gross profit ratio is staying pretty steady for this company. Overall, that's a good sign. So what are the big concerns for investors moving forward? What was the reason for the huge sell-off in this stock? Well, really, this can probably be attributed to 3 different reasons, and the first one is going to be online buying. It's about Nike's digital brand. Like you probably already know, following the pandemic, customers have been more engaged online than in brick and mortar stores. What Nike CFO has told us is that Nike Digital declined 10% in the quarter, and although their digital business has grown at an approximately 26% CAGR since fiscal 2019, they missed their Q4 plan on softer traffic, higher promotions, and lower sales of certain classic footwear franchises. But also part of the problem is this is looking like it may continue. He said, these franchises underperformed our overall digital business results in the quarter, especially in April and May, and continuing into early June. If we scroll down a little bit further, we can see he then stated, we expect first quarter revenue to be down approximately 10%. So okay, like we just saw, historically speaking, this company is seeing a 7% 10-year revenue CAGR, but now they're telling us revenues could be down 10% moving forward. That's a pretty large decline. And like I said, the CFO identified 3 major factors behind the 10% revenue decline. First off, we have foreign exchange. The strength of US dollar on foreign exchange has had a 1% impact versus 90 days prior. We then have the softening economy in China. China's a big part of Nike. China accounts for $1.7 billion or 13.4% of Nike's revenue. So a slowing Chinese economy, definitely not good for Nike. But then we have total digital. This is something we've already touched on. The slowdown in digital was attributed as a major component of the remaining revenue decrease. This is a huge concern for the company, along with key franchises across the total marketplace. In total, the company expects revenue for the fiscal 2025 year to fall by mid to single digits. Now, this came as a huge shock to investors. This is a huge reason for the sell-off. Like we saw, biggest sell-off in a single day in Nike history. There's pretty much a 20% drop right here, and over the past month, the company's down around 20%. Keep in mind, before the sell-off, the company was already trading right at its 52-week low at around $90 per share. And after this earnings report, the bear case started to grow for Nike. People became continually bearish on this company. In fact, the Wall Street Journal even recently put out an article. And this article was basically about how Nike is falling behind with running culture. And it's basically talking about how Nike is losing market share. If we look at Nike from a dividend perspective, we'll come up here, plug in NKE and hit enter. We can see the company now has a starting dividend yield of close to 2%. It's now sitting at about 1.96%. And actually, if we jump over to Seeking Alpha, click on dividends and click on dividend yield, we'll go ahead and scroll down and we can see this is the highest starting dividend yield Nike has had in 5 years. Historically speaking, we can see for a large portion of this company's history, that starting yield has been closer to around 1%. So buying in now gets you a much better starting yield than historically this company has offered. But really, this company has been a great dividend grower. We can see double-digit 10-year and 5-year dividend CAGRs. 5-year sitting at 10.34 and the 10-year sitting at about 11.5%. So the dividend history from this company actually looks pretty good, going from around 44 cents per share in 2013 all the way up to $1.39 in 2023, and as of right now, sitting at $1.48. And for the most part, this company has done this while maintaining a very healthy free cash flow payout ratio, with the exception of 2020. For the most part, the free cash flow payout ratio has remained below 50%, which is something you'd like to see if you're considering this company. And for the past 3 years, we can see free cash flow is easily covering those dividend payments. Free cash flow for 2021 was a record year for Nike, was sitting at about $5.9 billion, while dividends paid out was sitting at about $1.6 billion. Free cash flow in 2022, $4.4 billion. 2023, $4.8 billion, while dividends paid out was sitting at about $2 billion. But with the potential for mid to single digit revenue decreases over the next year, we'll likely see this free cash flow payout ratio actually go up moving forward. Not necessarily a good sign. If we look at Nike from a balance sheet perspective, come up here, plug in NKE. And from a balance sheet perspective, things actually look really good for Nike. They have a very healthy current ratio, and remember, current ratio is simply total current assets divided by total current liabilities, so it helps you understand how easily a company can meet their short-term debt obligations. So it doesn't look like they have any problems right now, and it really hasn't been a problem for the company whatsoever over the past decade. The debt to assets ratio has climbed up quite a bit since 2020, but really it still appears to be in a pretty decent position. This really isn't something I'm concerned about, so things look pretty good on the balance sheet. So really the question remains, can Nike turn things around? Yes, revenue will probably decline over the next year, but moving forward, is there opportunity? Is this company trading at $75.43 a good price to consider buying in at? Let's go ahead and find the intrinsic value of this company. Now to start off, let's look at them from a broad valuation perspective. If we look on Seeking Alpha, we can see price to earnings non-GAAP, that's non-generally accepted accounting principles for the trailing 12 months, is sitting at 19. But we can see the 5-year average for Nike sitting at 33.31. So compared to where they've been over the past 5 years, it looks like they are considerably undervalued. It's about 43% off from their 5-year average. And we can see for these other PE ratios, the same remains true. It's down by about 34%, down 50%, 33%. So this is an interesting perspective for sure, but there's a lot more to valuation than just price to earnings ratios. So let's go ahead and jump into my valuation spreadsheet. We'll come up here, plug in NKE, and the data will load in. Now, the company has a beta of about 1.01, so the volatility should follow pretty closely to that of the market. Now, the first valuation I actually want to look at is going to be a reverse discounted cash flow analysis, and I think this is an interesting way of looking at Nike, because basically what it does is it helps us understand how much free cash flow growth is the market pricing into this stock as of right now, based on the price that it's trading at. So right now, if we assumed Nike didn't increase their free cash flow any whatsoever starting from 2023, the company's value would be sitting at about $40 per share. So if we start bumping this up, we can see how much growth is priced into this company. Let's go ahead and put it at 5%. That would put the reverse TCF price per share at about $58. If we put it at 7%, put it close to about $67. At 8%, around $72. And what we can find out, if we put it at 8.6%, it puts it right at the current trading price for this company. So again, what this is telling us is the market is pricing in about 8.6% free cash flow growth into Nike. So the question we have to ask ourselves, is this free cash flow growth rate projection justified? Keep in mind, I think over the next year, free cash flow might actually go a little bit lower than it was in previous years, but long term, do you think this is justified? Now, if we keep moving forward, we'll go ahead and jump back over to our valuation spreadsheet. Now, the two that I really want to focus on are going to be the multiples valuation and the dividend discount model for this company. So let's go ahead and jump over to our multiples valuation and zoom in. And basically the idea behind this is we should be able to value Nike based on how the market is valuing companies that are similar in structure. And obviously, there's no perfect comparable for Nike. The brand is so big. But you can see our comparable companies here have an average price to earnings of about 24.7. We then multiply this by Nike's earnings per share of 3.27 and we come to an intrinsic value of about $80.83, which is actually just a little bit above that current trading price. Then finally, let's look at them from a dividend discount model perspective. And this values a company based on how much they pay out in dividends and how much that dividend is increasing over time. And like we've already touched on, the dividend growth from this company over the past decade has actually been really good, with double-digit dividend growth over 10 and 5-year time periods. Now, moving forward, I'm projecting a dividend growth rate of about 6.75%, which again, a little bit lower than we've seen over the past few years. With a discount rate of 8.5%, we come to a dividend discount model price per share of $90.28, which is close to about 20% higher than that current trading price. So if we jump over to the output tab, we can see the two valuations that we used averaged together gives us an intrinsic value of about $85.55. Then we also have to keep in mind the reverse DCF told us the market is pricing in about 8.6% free cash flow growth. Again, you have to ask yourself, do you think this is justified? But with a 10% margin of safety, looks like Nike is barely in that buy range, but it's not by much. And with a 20%, your acceptable buy price would be about $68.44. So I think part of the reality of Nike is if we look at how the company has traded over the past 5 years, when the company was trading as high as about $170 per share, the reality is this company was likely very overvalued during this time period. And like most companies, 2022 was a pretty brutal year for the market, and this company came down pretty considerably during this time. They got as low as around $85 per share, saw a bounce back, but again, now all the way down to around $75 per share, which is pretty much the lowest the company's traded at since around 2020. So as for me, Nike isn't a stock that I hold in my portfolio, and I really don't have any plans of adding it anytime soon. It appears the company could be slightly undervalued at its current prices, but it looks like there's still some potential headwinds the company's going to have to go through over the next few years. But with that being said, go ahead and let me know what you think of this company in the comments down below if you plan on buying, selling, or simply adding it to your watch list. And like always, if you'd like to be able to download any of my spreadsheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.